the first tax is capital gains tax. So in plain English, what is it? What does it do? So say, for example, I bought land, say 5 years ago for €100,000. I sell them today for €120,000. You can see there straight away there's a gain or an uplift in value of €20,000. It's that element to which capital gains tax applies at 33%. And it applies regardless of whether it's a sale or a transfer. So if there's a transfer to a son or daughter, capital gains tax will apply as well. So essentially what I'm looking at today is the various exemptions that will apply when we're looking at forestry lands. And one theme that will crop up all the time as I go through today is the importance of separating the value between the underlying lands and the actual standing timber itself. So when you look at a sale of forestry lands, the first thing you need to do, as I just said, separate out the value between the underlying lands and the actual standing timber. The value or the monies paid for the standing timber is exempt from tax. So essentially all you're looking at is the difference in value from when you acquired the lands originally to the point in time today when you're selling it. You're just looking at the underlying lands, that difference in value, if any. So the best thing to look at there really is an example of that would make it very, very straightforward. I'm looking here at 23 hectares of forestry, which was inherited in 2013. The person here is thinking about selling it, so a valuation was sought to show that the value of the underlying lands and the trees at the current value, or the hope value, and what it was back in 2013. So as you can see there, the actual the value on the right hand side of the growing or the standing timber is just taken out of or wiped out of the way. It's completely exempt. So really you're just looking at the underlying lands. So in that case, there is a small gain or difference or uplift in value in the underlying lands between 2013 and now. And when you apply your annual exemption, you're looking at CGT there, 33%, roughly €1,200. Without the relief in that instance, you're up to just shy of €13,000. So the value in it is quite evident there. Just moving back one point there, if I can. When we're looking at, say, a transfer, like I'll come across forestry really as not really in of itself, but as part of the farm essentially. So when a farmer is looking, say, to transfer the lands, say, to a son or daughter, and we're looking at capital gains tax, the primary relief there would be retirement relief, whereby the transfer is over 55, has owned the land for 10 years, worked them for 10 years. Any gain there, any tax payable on that is deferred for 6 years, and once the son or daughter retains on or holds on for 6 years, it goes away. The important thing there is that retirement relief won't apply to forestry lands. So that makes the relief then itself even more valuable or more pertinent